Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up on the show. Zimbabwe has the highest interest rate in Africa. The Reserve Bank of Zimbabwe retains interest rate at 35%. And Moody's affirms South Africa's debt rating, Ba2, maintains its stable outlook. And the National Bank of Ethiopia introduces a 14% cap on credit growth for commercial banks. And it's great to have you on the show. I'm Ladi Williams. Let's kick off with the markets now, starting with the metals market. Get a check on what's playing out with gold in trading today. So with most of the metals that we track right there, spot gold still unchanged, just like yesterday. But the U.S. gold futures, that's down 0.1%. Spot silver on the flip side, that's a lone gainer this afternoon with a 0.1% up to $31.06 per ounce. That's for silver. Then platinum, 0.2% down, $951 per ounce. And we have palladium there, 0.3% down. So just silver shining in the metals market today. And definitely it's all about the U.S. Central Bank at this point. Investors trying to figure out what's going to happen with interest rate hikes going forward. Last meeting, that's in December. So other markets now, see oil prices after that big run this morning. It's still on. Big jump we saw earlier today during the Asia trade. Brent crude, $74.07, 0.60% this afternoon. WTI, that's US version, has climbed up above that $70 psychological level, holding it by about 35 cents, up 0.56% this afternoon. So we're still seeing geopolitics pushing oil prices higher this week. So from the way it started on Monday, it's looking like this week might actually end positive, barring any other issue in the market. But definitely we want peace in the Middle East at this point. But it seems geopolitical tension is still getting the oil market higher. So when we see peace, the oil prices actually go down. Two other matters now. I'll see the House of Representatives have set up an ad hoc committee to investigate the planned retirement of more than 1,000 staff from the Central Bank of Nigeria. This followed the adoption of a motion on matters of urgent public importance moved by a member of the House, in Kem Kama, the plenary on Tuesday. The lawmaker who presented the motion noted that such a significant decision has socioeconomic implications for the affected individuals, their dependents, and the broader economy, potentially leading to increased unemployment and public dissatisfaction. The lawmaker also raised concerns about the planned payment of about 50 billion naira severance package to the laid-off retiring staff, stating that this lacks sufficient and oversight mechanisms. Meanwhile, the House of Reps says it will engage with the leadership of the CBN to evaluate the potential economic and institutional impact of the mass retirement on Nigeria's financial sector. And we'll see a total of 2.55 trillion naira was paid as taxes in the first half of the year by foreign digital tech companies operating in the country, which include Google, Microsoft, TikTok, among others. The National Information Technology Development Agency made this known in a statement, quoting data from the Federal Inland Revenue Service and the National Bureau of Statistics. NIDA specifically commended the foreign tech firms for their compliance with the Code of Practice for Interactive Computer Service Platforms, Internet Intermediaries, which provides valuable insight to address user safety concerns online across the platforms. While highlighting the impacts of the regulatory framework, NIDA noted that this has also boosted the government's revenue through payment of taxes by digital companies. And now to Lagos State. Definitely see the economic experts have asked the Lagos State government to accelerate diversification in key sectors, build resilience and address economic shocks. This was echoed at the second Lagos Economic Roundtable on Lagos Economic Outlook 2025 with the theme Building Resilience in Times of Global and Domestic Economic Shocks. Take a listen.
About 2 weeks ago, the Lagos State Governor, Babajide Sanwo-Olu, presented a 2025 budget estimate of over 3 trillion naira to the State Assembly.
If you have extra 500 square meters.
Without wasting time, the State Ministry of Economic Planning and Budget is holding a discourse on the economic outlook for 2025, which is focused on building resilience in times of global and domestic economic shocks.
Where it is expected that particularly executives in the economic affairs sector will meet with their counterparts from the private sector, dialogue and bring up resolutions to help Mr. Governor and his team at the Executive Council level to make functional decisions that will come round and affect businesses for good, that will come round and affect lives of Lagosians for good, that will turn around and promulgate that development and growth that we all aspire and desire to have.
The State Commissioner for Economic Planning and Budget, Mr. Okwe George, says the economic status of Lagos requires a collective effort towards sustaining development and uncertainties.
Our position is a testament to our resilience and ingenuity. However, these remarkable achievements do not shield us from the significant challenges posed by global and domestic economic shocks. This discourse provides a crucial platform for us to collectively address these challenges and explore forward-thinking strategies to bolster Lagos's fiscal space, sustain economic growth, and enhance our resilience.
Professor Adeola Adenikiju, who is the president of the Nigerian Economic Society, believes that policy frameworks must be in place to build resilience and also strengthen the fiscal space for economic diversification and growth in Lagos.
Lagos must also find a way of accelerating diversification of the economy. Okay, it's done a lot in that area, but it can do more because again, we still have a lot of concentration. Look at economic indices, and that can come to our agricultural sector, invest in agro-industrialization, processing and value addition, sustain efforts such as what is going on at Lagos and Kebbi, and Lagos has the opportunity to also do more of that with neighboring states.
While the government plans towards the 2025 budget of sustainability, the Special Advisor on Taxation and Revenue says 66% of next year's budget will be gotten from the state IGR.
What is expected is 66% of this budget must be gotten from IGR. So it means that our internally generated revenue must give us about 1.97 trillion.
Various suggestions like green opportunities, demographic dividend, and food security have been put forward at this economic roundtable discussion. And economic experts expect governments to work towards achieving a secure prosperity tomorrow.
All right, so right about now, we'll be joining a live coverage. That's for our DSTV viewers, the official flag-off ceremony of the construction of the Kabusa-Keti access road in the FCT, but Business Incorporated continues on all other platforms. All right, now to our first conversation. Now, we have been hearing a lot coming out from the Binational Commission that was happening in South Africa yesterday. We know President Bola Tinubu attended that event, and a lot of conversations from bilateral conversations between President Tinubu and the South African president. We also hear that South Africa is looking at easing visa rules for Nigerian tourists. All right, let's discuss the expected impact of this now with Damilare Ashimiu, macro strategist, AfriInvest. Join me via Zoom. Great to have you on the show.
Good afternoon, Ladi. Compliments of the season.
Compliments of the season. And, looking at this is actually coming, at a time like this when we have the Yuletide season right now with South Africa, easing travel restrictions at this point. Talk to me about the economic impact of this. And I guess maybe Nigerians will be visiting South Africa for this Christmas.
Yeah, once again, thank you, Ladi, for having me on this show. Let me start by saying that I'm happy this happened because it's never late to do the right thing. This is the right move. And I'm saying this not because of the relationship between Nigeria and South Africa alone, but I think this is a move that Africa ought to have initiated long ago. When you look at Africa's variables or metrics, you look at a continent that has a land size that is threefold that of Europe. You look at a continent with a population that is twice of Europe at about 1.5 billion. When you now look at it in terms of the trade that goes on within those 54 countries that make up the African nation, the trade size based on 2023 number is just in the region of about 3.1 trillion US dollars. But when you compare that to Europe with a smaller population, smaller landmass, you're seeing trade of about 17.3 trillion. That, yes, it could be argued that most European countries are advanced country or developed country. But your continent will not develop if there are no trade synergy. And that is the sort of things that this sort of move can help unlock. Now, when you then scale it down, or you look at it from a more closer perspective, the trade relationship between Nigeria and South Africa, looking at data from 2020 till Q1 this year, the total trade between Nigeria and South Africa stood in the region of about 5.4 trillion in Naira term. And out of this size, right, export has been around 4.4, while the balance is import. So meaning that Nigeria has the trade surplus over South Africa. But more importantly, if you then look at the fact that while Nigeria have only exported about 4.4 billion goods to South Africa, is the region of 12.9 trillion. And when you then look at the size of Nigeria's trade with the entirety of Africa since the pandemic, since 2020, that is just in the region of about 13 to 14 trillion. But to India alone, we have done export of about 12.9 trillion. So, which means that Nigeria's trade with South Africa is very low. South Africa trade to Nigeria is even more lower because the business environment is not very conducive. So, this kind of initiative is a win-win for the two countries, especially from the South African end. Because when you look at it, right, the new policy is saying they are removing passport request for Nigerian businesses and tourists who wants to come in. And these two countries should have a lot of synergy because not until recently, Nigeria and South Africa happens to be the biggest economy in Africa. Of course, exchange rate has deflated Nigeria to the fourth position. But if these two countries, looking at their market, looking at their strategic location, Nigeria close to the Atlantic Ocean, South Africa close to the Cape Route, which is very close to Europe and Asia, then having trade synergy will help both countries. And I hope the South African government will take this step further. This good step take it more further in order to even ease the business environment for Nigerian businesses. Because while we have a lot of South African businesses across sectors, telecoms, home delivery, media, thriving in Nigeria, the sort of environment that Nigerian businesses face in South Africa is not so very encouraging, given a historic trend. But we believe this is a move that will help change that narrative because we have a lot of Nigerian players in the banking, in the consumer good, who have at one point over the last 2 decades ventured into businesses in the South African market, but they had to quit because of the sort of hostile policy environment. But I believe this kind of new policy that is being rolled out will help address that. And the two countries and Africa at large, given the fact that we even have a long-term agenda, African Union 2063 agenda, would then begin to see themselves as a unit and trade and strengthen themselves because we are having what I would call trade protectionism gaining momentum in the world. We have the BRICS bloc, so we should have a very strong African bloc. We should leverage African Free Continental Trade Initiative to integrate the continent in terms of trade, in terms of value, in terms of knowledge sharing for the African continent to become big. It is very not encouraging that Africa, as big as it is, landmass population, has an economic size that is less than 15% of what the entire Europe is. That shows you that we can optimize this potential. And I believe this move is one of the right steps to take to do that, especially because it's coming from Nigeria and South Africa, which is two major economies in Africa.
All right. So, talking about the AFCFTA trade pact at this point, what do you think, Nigeria should be doing, on its part to make sure that, with these, relaxation of restrictions for travel, how we can actually make our borders more effective, so that we can actually take advantage of a trade pact between, countries like Nigeria and South Africa under the AFCFTA?
I think the first and major missing piece for Nigeria around border issue is the political will to galvanize the security architecture to actually secure it. Yes, most countries or every major country in the world have issue of illegal migration. Even the US have that issue, and we all recall that that's from one of the major pre-electionary subject of the now elected president of the US, Donald Trump. But more importantly, if we have the political will, if Nigeria has the political will, Nigeria has one of the largest and one of the most respectable security architecture in Africa. If the political will to secure those borders are there, right, we can leverage our resources to keep our border very safe, at least to a very large extent, such that the trade that will go between Nigeria and neighboring countries or other African countries will be the ones that are legitimized, will be the one going through the appropriate route that will deliver not just value, but regional security. So I think one of the things Nigeria can do to better take advantage of this is to see the political will, come to play in terms of securing our borders to avoid dumping, because when they bring in things that are low quality or low price from another country to your country, it's like dumping. But when you want to compete fairly, you need to put measures in place. And one of the measures we need to put in place is to secure our borders very well. But even more importantly, we also then need to improve the business environment locally, because there's what we call comparative advantage. A country will not have comparative advantage if the average cost of its output, even if you assume that quality is uniform, in real sense, quality is not uniform. But even if we assume that quality is uniform, right, Nigeria will continue to struggle to optimize or maximize or benefit from this sort of arrangement or this sort of regional integration that after agreement has brought about in terms of ability of countries in Africa to trade good among themselves. Nigeria will not be able to benefit adequately if the business environment is not conducive enough. If Nigerian businesses are not able to produce at a rate that when they offer the good to other African countries at their own final price, it is not competitive. So by and large, aside addressing the issue of our border, we then need to also look inward, address challenges facing manufacturers, because one of the major things that we can do is to encourage our manufacturers as much as possible in terms of power, in terms of logistics, in terms of the challenges being faced at the port, to be able to produce at competitive price, transport it, and package it very well. So when all these variables or these factors are properly put in place, then Nigeria would benefit significantly, because Nigeria have a lot of, has a very big market, and also have a lot of talented people, experts in different fields, especially in the area of manufacturing. But what is the missing piece? Nigeria can actually be the factory of the African continent, just like China is the factory of the world, accounting for about 18% of global trade. So Nigeria can also be the factory of Africa, supplying nothing less than 30% of manufacturing from Africa. If we put our home right, help the business environment to be conducive, and remove bureaucracy from ports, from other areas for ease of exporting goods.
Right. Well said, Darian. I'll cheers to that. For Nigeria, becoming the factory of Africa. That would be definitely great to see. Thank you so much, Damilare Ashimiyu, macro strategist, AfriInvest. Thank you.
Thank you for having me this afternoon.
All right, we'll take a break now. When we come back, we head straight to the markets, find out how your money is performing. That's in a moment. Stay with us. All right, let's run straight to the markets now. We have Anete there to tell us what's playing out for the local bourse and most of the global markets that we track right here. Good to have you, Anete.
Happy midweek, Ladi.
Happy midweek, Anete. I'm not seeing that Santa, what we expect.
Ladi, it is still
I'm waiting patiently.
It's still early. Santa, the stock market Santa. Right. I don't know about the other Santa that most of us always look forward to. The one that you call Father Christmas, but the Santa that we
when
call,
is Father Christmas coming?
Yes,
I miss
it's
Father
still a bit too
Christmas.
early. Times have changed, so maybe it's taking its time. But so far, month to date, the market is still green, at a plus of 0.2%. And then year to date, it's still also green, 30.66%.
Right.
But a little bit lower than the inflation rate, which you were talking about earlier today.
But I'm still waiting for that Christmas feeling, I'm waiting patiently.
Well, you know what happens to those who wait patiently, you definitely will get, the better part of your expectation.
All right.
And we hope it's not going to get dashed. Okay. All right. Okay, so all you investors in the domestic market as well as the global investors, because we have both local and foreign investors right here, and then also the domestic ones here also trading in some parts of the global market. So this is how the market on the Nigerian stock exchange is trading at intraday. We saw that number making a slight pullback, no thanks to Ardell's share price having effect. But it was just a tad, 0.03% in the red for the close of Tuesday's trading session. But as at intraday, the last number that we tracked, the number is back above 98,123.44. What a very interesting number that you see there, 0.43% gain in the green at intraday, while the Johannesburg Stock Exchange also in the green, 0.68% at intraday market numbers. So these the two giants, the two major bourses on the African continent, still doing pretty well at intraday. And let's see how the other two markets on the continent are trading, except for the Nairobi Stock Exchange, which closed in the red, 0.59% on Tuesday. The EGX 30 for Egypt was almost 1%, the last track that we had there, and closing in on the 31,000 index level for that market around the African continent. So that's it, a nutshell for most of the markets. It's pretty a green picture. And still talking about South Africa, we saw that the market numbers didn't really respond to that contraction that we saw was reported yesterday, 0.3%, which was no thanks for. It was a weaker growth for that for the South African economy, no thanks to the drought in the region, and that's also caused a big drop in the agricultural production for that country. But so far, analysts are saying that they expect that the country's growth will return to a modest performance in the last quarter of this year, and at the same time, they're expecting that it will strengthen further and broaden throughout 2025. So that's the expectation for South Africa's economy. And now let's talk deeper about our own economy. And this time, the debt market is where we're looking at. Well, last time we were talking about the Euro bond, which was oversubscribed. First of all, it was expecting about 1.7, but this oversubscription came in at about 9 billion, and then government was able to allocate $2.2 billion. But this time, let's talk about the sovereign sukuk, what you call the Islamic bond, and we'll have more. We'll do more about the investor education into this market for those who are not too familiar with that market. And to give us more insight on that, let's bring in Akpenwe Oputu, chief dealer with Lotus Bank, to give us details about this. Thank you for joining us, Akpenwe.
Thank you for having us on the program today.
Okay, so I have lots of questions for you, but I think let me start from the middle. Well, you see, the last time that we had a sovereign sukuk was sometime in 2023, where the DMO issued about a $350 billion, 350 billion naira 10-year Hara sukuk. So, and that was also oversubscribed. But can you give us details about if there's any possible sukuk issuance upcoming?
Okay, so we usually have the DMO advise us of if there were going to be any sukuk in 2024, but up until now, we haven't got any information as to the Jara sukuk when it's going to be issued. But what we know is that there's the DMO is going to come up with an FCY sukuk, so we expect that to happen as soon as possible. Like you mentioned earlier, they already issued the Euro bond, and we could see the oversubscription on the Euro bond, a total of about $9 billion, where it was unsubscribed to for an offer of about 2.2. So we expect that will play into our sukuk market sometime this year when the FCY sukuk is actually issued.
Okay, quite interesting. Okay, so now, what are we keep talking sukuk, and then the proceeds are always used for infrastructure development. Some are so visible, I'm sure some people have been able to cite that. But can you tell us more about the potential economic benefit of this sukuk for Nigeria?
Okay, so the sukuk is actually an Islamic instrument. For the government to issue a sukuk, there has to be an underlying asset for which this capital is being raised, for which the funds are actually being raised. So if there's a project that the government is looking to embark on, a road project or a construction, whatsoever infrastructure project the government is looking to do, that is when they come into the market to raise this sukuk. Like you see, if you live in Lagos and you go through the CMS route, you can actually see one of the sukuk 4 issuance, the road project that it was used for. So for now, I know the administration has the infrastructure bond, which they are currently using for these capital projects, and probably the reason why there's been a delay on the sukuk issuance. But we see that coming because there's some investor appetite for the sukuk. So it's not just for Islamic faithful, it cuts across different types of investors. So people are actually looking now for it because of the way the Islamic sukuk bond works. It actually covers those transactions that are Sharia compliant, and I think a lot of people are on the lookout for this issuance.
Okay, so if there's going to be any issuance, how is that going to impact the Nigerian debt market?
So it's going to form part of the government borrowing. So last year, like you mentioned, about 350 billion of that was issued. We expect to see somewhat that same volume in the market. So if you add that into the debt they're already looking to do, we should see an increase in the government's borrowing and spending. A lot of this administration is what they're looking at is doing a lot of infrastructure projects. And I think raising this sukuk bond will be very good. You can actually see the underlying assets for which these funds are being raised. It's very different from your regular bonds that are used to complement the country's budget. So people are actually looking out for this. We have calls, we've had engagements with the DMO, we have engagements with the central bank on this. So we expect that as soon as possible, we'll see this instrument roll out in the market.
Okay, so finally, so what are the marketing strategies, or what marketing strategies can be used to attract a would-be investor into the sukuk market?
So when you actually show what the instruments are being raised for, you see green projects coming up here and there. You see those are actually things that the internationals are actually looking at to see that the country is being compliant. So you are supporting green projects, and that's what's basically, there are some sukuk bonds. There's the infrastructure bond that was just raised recently. These are actually projects that people are looking out for, and the foreign investors are looking to invest in Sharia compliant instruments. So it's actually, we have a lot of calls. We have people who are looking to invest in these bonds, and we're just waiting for it to be rolled out in the market. So the investor appetite is very strong on that front.
Okay, Akpera, thank you so much. And of course, we hope that because Nigeria's debt instruments, when you talk about FGM savings bond, the FGM bond, the Euro bond, the most recent domestic dollar bond, all this debt instrument from Nigeria is always oversubscribed, and sukuk is no exception. So we look out for that expectation made by you.
Thank you very much. Yes. Okay.
That was Akpenwe Okputu, Chief Dealer at Lotus Bank, giving us details about sukuk bond investment, and then, of course, what is being used for and how they can attract investors. Okay, now let's talk about the Middle East market. Well, we see the Middle East market being slightly in mixed territory, not too different from what we had in the previous session there. 0.17% intraday negative movement for the Dubai index, 4,839.25, while the Abu Dhabi index in the green, 0.37% at 9,268.84 for that market. For the other two markets within the Middle East, we see it's Saudi Arabia, 0.25%, a quarter of a percent in the green, while the Qatari Stock Exchange in the red, 0.16% for the intraday market movements. And let's talk about the U.S. markets. Stock futures is climbing for Tuesday, for the Wednesday's morning session, and this is coming after we saw a record high close from the S&P 024. Another record was set there. The Dow Jones Industrial Average, it was a little bit in the red, but for the stock futures for Wednesday morning, 0.44% in the green, and the Nasdaq index 0.55%. The three averages are actually poised for more growth. This is December, so the month of December is always a pretty good month for many of these stocks. Is the season of gifting, and it's the holiday season, so many people have to buy things, and at the same time, the GDP growth would also reflect on the averages that you see here across the market. But turning to what to expect for Wednesday, the market is expecting that there will be a review of what they call the ADP private payrolls report for November, which is expected to show a growth of about 163,000 positions, as well as the S&P, that's the PMI for the U.S. Factory orders and durable goods, which is also expected to be released today. Well, and finally, we'll also have Jerome Powell, that's the chair of the U.S. Federal Reserve, who will be speaking in New York in a moderated discussion in Wednesday afternoon. That's for U.S. time. So that's what to expect for the markets on the U.S. On Wall Street. And finally, for the Asian market, we see Asian markets is actually a mixed picture there. We see the Nikkei bouncing into the 39,000 points, which it had lost some few months ago. And then South Korea has been in the news for not too good reason. We see the political turmoil there, where at some point we saw the pressure is mounting on President Yoon Suk Yeol to step down after imposing and then lifting a martial decree within hours. We see that impact had affected both the country's currency as well as the market index there, which is the Kospi, which was down by 1.29%. For the Hang Seng Index, 0.02%. And for the other two markets within the Asian region, we also see a mixed picture closing there, all in the red for the Shanghai Index and India's Nifty 50 down 0.04% and 0.42% for the Shanghai Composite Index. So, Ladi, that's it for the markets.
Definitely, political turmoil will make investors a little jittery, and we're seeing that play out in those Asian markets. Well, thank you so much, Native, for giving me the details there on what's playing out in most of the markets we track. But let's take it on to London now. We have Juliana standing by. Great to have you, Juliana. So we see the reports, Mastercard Inc. have agreed in principle to pay around £200 million to settle a UK class action lawsuit. What are you hearing about this?
Good afternoon, Laddie. This is actually quite a big case and has set a precedent for potentially more settlements for consumers who have been caught up in some of these interchange fees, which is basically a hidden fee that consumers pay if you are purchasing via MasterCard. And as I said, this is quite an old case concerning interchange fees for customers that were using MasterCard between 1992 and 2008. And at the time, when the former financial ombudsman, Walter Merricks, put it to the court, it was going to affect about 46 million UK consumers, valued at over £10 billion. It's since become a lot lighter, but certainly it's a watershed moment that MasterCard have agreed in principle to settle. So basically, they'll be paying about £200 million worth of back payments to consumers who were overpaid. So instead of paying a certain number of pounds and pennies in their settlement fees, they were paid their interchange fees. They were paid much more. Again, this is quite complex. Lots of these interchange fees regulations has changed since the UK left the European Union. It was actually a EU regulation that has since been pushed forward by UK courts. But like I said, MasterCard have agreed in principle. And again, are we going to see more cases like this, it is very likely.
All right, we'll definitely keep tracking that one. And then we see the Organization for Economic Cooperation and Development, that's the OECD, said the UK inflation will also surpass previous forecasts for next year. So I'm guessing risk to rate cuts expectation.
There are risks to rate cuts. In fact, PMQs is just going on in the Palace of Westminster, and the Conservative Party, led by Kemi Badenoch, is tackling Sir Keir Starmer on the OECD's findings. They are a Paris-based think tank, and they have been looking at projections of the UK economy, but most specifically, the Bank of England's interest rates decision. And inflation, we know that interest rates are currently at 4.75%. There had been some indication, certainly earlier in the year, that perhaps the UK economy was back on track. We'd got rid of 14 years of Tory fiscal policy, expecting and anticipating the Labour government to be a little bit more consumer friendly. That's not been the case. Of course, that was thrown completely out of the water when Chancellor Rachel Reeves imposed £40 billion of significant spending increases and borrowing. And that has scared the market. So I don't think we're going to be seeing interest rates dropping anytime soon. In fact, I don't think they're expecting to fall back now until 2026. That is the forecast by the OECD. And again, looking at inflation, they don't expect it to dip for a while too. And this is going to be a major cause for concern for Sir Keir Starmer and the Labour government. As I said, it's a topic of major discussion in the Palace of Westminster today. But away from politics, this affects real people. It is incredibly cold here in the UK. This is the time when the NHS is most at strain. There are excess deaths in the UK, believe it or not. I know we talk about the weather over a cup of tea like it's a joke, but it's not. It's incredibly cold. And if you're not able to heat your homes because you cannot afford it, and pensioners are dying because of changes in winter fuel allowance. This is a big geopolitical issue. So yes, on the one hand, we've got the OECD saying interest rates are not going to come down anytime soon, but that does have a ripple effect on the wider economy and the populace as a whole.
Right, definitely, Juliana. I keep thinking to myself, when inflation is going to leave all of us alone, hopefully at some point.
Hopefully at some point. That would be a great Christmas gift, wouldn't it?
Yeah, just leave us alone for this Christmas. Thank you so much, Juliana.
Thank you, Laddie.
All right, now let's take it on to Europe now. Let's get a check on what's playing out there. We see French lawmakers are set to vote today in a no-confidence motion against the administration of Prime Minister Michel Barnier, which could topple over the current French government. France's political woes have been in the spotlight this year after snap elections in June. Now, Europe's biggest economy, Germany and France, in turmoil. For more on this, let's talk to Vada Imra there. Great to have you, Vada. So what can we expect from France?
Thanks for having me. Today could be the day that triggers the ouster of the current prime minister in France, who has only been in office for 3 short months, as the opposition and the far right, led by Marine Le Pen, will vote on the future of this government. The likely outcome is that Barnier loses his job as prime minister of France, and it would then fall on President Emmanuel Macron to pick his replacement should this happen. However, the president and prime minister are both pleading to lawmakers to let the government stay so they can work to pass the budget. In the case of France, the far right is teaming up with the left to oust this government. This is a very unlikely alliance, which I presume could only result from deep resentment and dislike of how things are going in France. If we assume that Barnier's government is out of the door today, could snap elections be called again soon? Well, not soon enough, because French law requires 1 year to pass between snap elections. So this would only be possible in June 2025.
I would say France and Germany's political problems have been a setback for Europe What are the core issues here?
Passing budgets this year in Europe has proven to be an ordeal, with Germany already collapsing on fiscal and budgetary disagreements. For France, the issue is how to reduce the budget deficit, which is currently sitting well above the European Commission's limit. And because France spent a lot keeping the economy afloat in the last few years, it has also spent a lot and resulted in this budget deficit. The budget being presented by the current government includes cuts worth 40 billion euros and a plan to raise 20 billion euros from tax hikes. The European Commission likes the plan, but the people of France do not. Ideally, the budget would pass before the year ends, and this is looking very unlikely, especially if the government topples over today. Similar issues have plagued Germany, where government spending was way out of line, and now the budget for next year is missing billions of euros, and no one can agree on how spending should be. Add politics and power grabbing to this mix, and it's a disaster for the economic heart of Europe.
How is this impacting markets?
Well, French bond futures are quite weak, and so are European futures as a whole. The euro still remains dipped close to a 2-year low that it touched last week. France is the Eurozone's second biggest economy. And so unrest in Paris results in a domino effect here in Europe. Investors have punished French assets during this political crisis. Since June, when Macron called quick elections, the French CAC 40 index has dropped in nearly 10%. And this is the heaviest loser in the top EU economies. But markets overall globally are also quite jolted after the events in South Korea, which may be seeing the biggest political crisis in decades.
All right. Thank you, Vanda.
Thank you.
All right, to other stories now. We see Zimbabwe's central bank has retained Africa's highest interest rates and affirmed its tight monetary policy stance will continue into 2025. The Reserve Bank of Zimbabwe's hawkish stance has supported the nation's bullion-backed currency and helped it recover some lost ground against the dollar. The ZiG, short for Zimbabwean gold, strengthened 12.7% against the U.S. currency in November, its best month since a shock devaluation on September 27th, that wiped out about 43% of its value. The devaluation led to a slump in government revenue / workers' earnings and sparked double-digit monthly inflation for the first time since the currency's April debut. And many African mining operations, especially in countries like the Democratic Republic of Congo, are under intense scrutiny for human rights abuses, including the use of child labor, unsafe working conditions, and the exploitation of local communities. At the 2024 African Critical Minerals Summit, young leaders are calling for African nations to commit to advancing human rights within the sector, arguing that these violations not only damage the reputation of mining, but also could lead to sanctions or boycotts. Our correspondent in South Africa, Innocent Somoza, reports.
Mining, particularly in underground or remote locations, is increasingly dangerous. Young workers may be less experienced, increasing their vulnerability to accidents, exposure to toxic substance, and long-term health issues like respiratory diseases. Speaking at the 2024 African Critical Minerals Summit, Ofenze Ntsani from the South African Mining Youth Association is calling for stronger human rights commitments in the mining sector.
I think the issue of child labor is a very prevalent matter in critical mining in Africa. So the first thing I believe that the governments of those respective countries must do should reinforce the regulations regarding the mining sector, especially regarding the issue of labor and compensation. Secondly, they should speak to the private sector and have a working relationship, because some of these companies that are exploiting this legal loophole are in the private sector. So those private sector companies should come apparent and should build a relationship with the government to ensure that issues of labor, wage compensation, and regulations, the government and the private sector are on one equal footing.
Platinum engineer Khoto Matlaji shares the same sentiments.
I think African governments really need to start coming up with initiatives that help young graduates in the mining industry to actually have a word in the industry. Because in the current moment, mostly the people who hold higher positions actually have a say on the legislations and everything that happen in the country.
Women are often underrepresented in leadership roles within the mining sector. Deputy Chairperson of Women in Mining South Africa, Mukhaliadi Sabelo, says this lack of representation hinders efforts to address gender-specific issues in the industry.
Yeah, and you are really correct. I mean, the fact that women are not there means they cannot speak for themselves, and representation is quite important. I do have to say that the industry has made great strides in making sure women are coming into the industry and are in roles of influence. There's obviously still so much more that needs to be done, but we do need to recognize the progress made so far. And the truth of the matter is, until we have women represented, women issues will continue to not get addressed, and that remains a risk, as you've said.
As the demand for critical minerals continues to grow globally, the need for responsible and sustainable mining practices becomes more urgent. From Pretoria, South Africa, Innocent Samos, Channels Television News.
All right, thank you, Innocent. Well, let's get a check on what's playing out in the crypto market, and from all indications, it's still a very bullish, greedy markets we have right here with Bitcoin still at $96,000. BNB, that's rising a lot at this time, $777. We have the likes of Tron doing about 70% gain. So the market is wildly, wildly bullish at this point. Let's get some of the top headlines in the crypto market. Now we see XRP that has 4x, that's 4 times bigger than Nigeria's stock market, and that's according to a report there from Olumide Additional. We all know Olumide, so he's calculated XRP's even the volume alone. The volume XRP is doing about $30 billion, $39 billion actually in volume. So that monster run we've seen from XRP from about 50 cents, that has taken XRP's market cap 4 times more, about 400%, $149 billion there. That's what XRP's market cap is sitting at this time with this run we're seeing. They would say the martial law in South Korea, that boosted crypto trading volume with some traders trying to get out of the crypto market when they had that issue there in South Korea. We saw a record $34 billion after the South Korean president enacted an emergency martial law in the country. That was December 3rd, citing the necessity to protect the country from North Korean communist forces. So we saw a big volume there. Then Paul Atkins has been selected as the U.S. SEC chair by President-elect Donald Trump. He's given this appointment there since we saw Gary Gensler actually moving out, and Donald Trump did promise that if he won the election, Gary Gensler would be out. And so we have Paul Atkins. He's going to be the next U.S. SEC chair. We'll definitely watch how that impacts most of the market. All right, let's talk to David Gitonga now, founder, Bitcare. Great to have you, David.
Thanks for having me, Laddie.
Fantastic. So we're seeing the top 100 coins in the market. That's on CoinMarketCap. They're pumping a lot right now. Is this a trend forming that alt season that most of the investors talk about in the market? Is this it?
Yeah, so we are almost there. We are almost there with the alt season. So what happens is the alt season is, we usually refer to an alt season when over 75% of the altcoins, are performing better than Bitcoin. So far we are almost around 73%. So we are almost there. So yeah, the markets are looking good for the alt season.
Yeah, looking quite bullish, but I'm wondering, is there more upside to this run we're seeing with the altcoins? That's the major altcoins on the top 100.
Yeah, so what's happening? You've just shown, XRP. We have BNB. These are some of the tokens that we are seeing, going up. I love your headlines because they actually talk about what's driving this market, right? The market sentiments, the political climate. We just saw the elections in US with the Trump win. That was a big win for the crypto market. Initially with Bitcoin, we saw Bitcoin go up, almost hitting 100,000. But then after that, we've seen altcoins start to come up. So what has been happening, and it's interesting if you look at the market. Initially, with the previous alt seasons, most of these altcoins were being driven by Bitcoin, right? So if Bitcoin goes up, you notice that holders of Bitcoin start moving into these other altcoins. So what has been happening now is Bitcoin has remained, it's almost stagnating, but the altcoins are going up. So what has been happening is a lot of people are now moving into the crypto space, into the altcoins, either via stablecoins or via fiat pairs. So those are some of the things that are also driving some of these altcoins. If you look at Tron, for example, Tron is the second largest network when it comes to stablecoins. Nothing much has happened in regards to the Tron token itself. So what is driving the surge, right? So obviously, these volumes that are coming through the Tron network via stablecoins also influencing, some of these activities that we are seeing.
Right. I was seeing the likes of XRP. I think the last high in the last bull run, I think, was about $3-ish. And, a lot of these top 100 coins, some of them are not so far off from the previous highs. So do you see them surpassing previous highs?
Yeah, so a few have actually, surpassed their previous highs. So the likes of Solana and the rest. But we're also seeing a good number that are almost, hitting the all-time highs. So BNBs and other newer coins that have come up. Every alt season, there are always new coins. So, but the previous ones, we've seen them come really close. So, like we mentioned, we are at about 73%. A good number have already hit their all-time highs. We are still waiting for a few more. But I think as the alt season continues, we are going to see all-time highs being hit. All the market conditions, it looks like this is going to happen unless something dramatic happens. But, if you look at the sentiment, if you even look at the Bitcoin market, because also that's a very good indicator of where we are going. There are still more volumes coming in via the ETFs. And I think as more money gets into the crypto space, obviously the alt season will continue to go up to some extent. And I think we are going to see some all-time highs being hit. So it will be good to look out for some of those.
Right. And, definitely we know some investors, when they're on the sideline in a bull market, they hate the bull market. They want it to be bearish so that they can come in, at some point. So when you're looking at, such investors on the side, they're seeing all these new highs at this point. Some would feel like, I don't want to buy the top at this point. And some that already invested at this point might be looking for an exit, but they don't know where to exit because they feel like it's going to go higher and higher. Then somehow Mr. Market takes all of that unrealized profit from you. What's your advice to such investors?
Yeah, so we call that the fear of missing out, FOMO. So people are like, am I too late? Am I too early? Do I exit now? So usually what we always say is the overall crypto market will always go up. But once in a while, there are these opportunities that come where, the market goes down. Usually, if there's a retracement. So for example, if Bitcoin hit about 98,000 and then it went all the way down to about 92,000 or thereabout. So usually when a retracement happens, that's a very good opportunity. If you look at all the other market conditions and everything seems aligned. There's no big shock, right? For example, there isn't a lot of volumes coming out or people withdrawing from Bitcoin. It means that price is valid, so it's not going to go down. So usually you look at the volumes. This is open data. It's available on crypto exchanges. If there are no volumes coming out of the market, it means then that token will eventually reach that price that it was before, right? So that essentially that's the all-time high. So you want to get in when there's that kind of a retracement.
Okay.
If you feel you want to wait a bit longer, again, look at the market, look at the volumes. I always look at the volumes to help me determine if the price will go up, it will hit an all-time high, or it will give me an opportunity to get in.
All right, we'll definitely keep watching to see what plays out further in this market. Thank you so much. That was David Gitonga, founder, BitCare. Thank you.
Thank you.
All right, so that's how most of the markets we track today, that's how they're looking, and definitely we'll give you more. That's for the local boss for the close today. That's on the news at 10. We'll get a summary of how your money performed for the local boss, and we'll track out the markets again tomorrow. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.